Morning all. How are we all doing? How's the microphone this morning? Because it's still broken. It's in the red now. Is mic sound okay? Or is it like overpowering in your ears? That was obviously going to be overpowering because I shouted. But this G-Hub software is absolutely balked. Technical term that. Just doesn't work. Since I did this update, this is basically not working. So all my mic settings just don't work. I've uninstalled it. I've reinstalled it. Sound is okay. Good. Harold, terrible sound. That's not helpful, Harold. Yeah, anyway. So if it is too loud or anything, let me know because I can adjust it. But something's gone really wrong with the software that runs the mic. Anyway, so yeah, morning everybody, Monday. Sound is slightly distorted. Let me turn it down a bit. I'll put it back to where it was, which is 80. That's where I had it before they did the update, which is that when I'm talking normally now, it just touches into the red, but most of the time it's in the yellow, which is where it kind of should be. I don't know. Something's wrong. Can't be asked to figure out what it is because I've tried every search on Google and none of it works. So hopefully they'll roll out an update and it'll work. So markets this morning, just quickly while we're at the open. There's no trade this morning pre-market on the DAX for me. Anyway, pre-market range is a bit too big today. 290. Sorry, a bit too small. 290. Minimum range we're looking for is 346. 10%. Pre-market range is fine on the FTSE, but there is no open today. The volume's dead, so no movement. We'll have a look through FX, but there's nothing happening on the indices at the open this morning. Yeah. Just closing out the pound CAD. I was just watching this morning. It's the only trade I had on. And we basically just hit yesterday's high, Friday's high this morning, and they sold the crap out of it. 5-minute chart, they are like aggressively selling yesterday's high, which is there, Friday's high. So we broke through it and immediately sold it off, got a reversal alert, and it's tanking. So I'm just jumping ship on that because bearish on the pound, and they're selling it really, really hard. We're struggling. This trade is a kind of obsolete now anyway. So I took the trade there after the RSI extension to the downside. Since I got into the trade, we've had a down day, an up day, and a sideways day. So for 3 days, it hasn't gone anywhere. So I'm just taking that $300 and walking. I'm worried about them just basically flagging that and continuing that downward trend. So out of that. Updated drivers. Drivers are all up to date. So can't do anything there. I've done everything. I've worked in IT all my life. I know how to do stuff like that. And it's just something, I don't know. It's just not working. Anyway, morning Danny, Yotko, Yusuf, Gregors, Virginia, Steve, Wojciech, Thurwas. Morning. Morning Harold, JC, Steve. Morning. George. Somebody sent me this because I keep pronouncing your name wrong, George. Croissant? I can't hear it because I haven't got my volume up. I've forgotten how to pronounce it. Good morning anyway. Morning, Steve. Oh, that's good. Yeah, morning, it's time, Baggy. Morning, everybody. How we doing? Right, so let's have a look at the news. Start the morning off. Long on the DAX, long on the FTSE, sorry. So, today is a bank holiday. There's a lot of news this week, as you can see, loads of it. So, but nothing's happening today. It's a bank holiday in Japan, and there's no scheduled news at all. So, Welcome to summer trading today. I think we're probably going to find a day like that. So no news scheduled at all today. Nothing to worry about. Nothing's going to move the market specifically. Something is wrong with my audio. I don't know, Patrick. Yes, there is something wrong with the audio. There's something wrong with the mic. I spent 2 solid days now uninstalling, reinstalling, resetting. It's broken. I know there's something wrong with it. The GTech software, I've Googled it. Nobody else has a solution. There's 1,000 billion people going, why is that not working anymore? And they haven't done anything about it. It's just not working. They've broken it. They did an update on Thursday last week. And since then, nobody with a Yeti Nano, a £250 mic, nobody with it has it working. I can't do anything about it. It's buggered. I just made a new word up. Buggered. You can work out what that is. So Tuesday, you just have to turn me up or down or whatever. I can turn my volume. If I'm too loud in your ears, I can turn that down there. I can put it there. Maybe that's better. That's now more in the yellow. It's not going anywhere near the red. So that might be better. I'll try that for a bit, see if that works. Just turn me up or down. Can you roll back the software update? No, tried that. There isn't a version. It's just not working. I hate it. It always happens when they push out updates for stuff. Like my Streamlabs software. They did an update on this. It's a really complex bit of software. They did an update on it. All the layouts I have, I can't remember which stream it was months ago, but I did the stream, I started it, and it was all over the place. And basically they updated it and they broke everything. It's like people don't test stuff, do they? They just push out an update and go, there you go. Anyway, Tuesday, we have the wage price index for Australia. Doesn't really do an awful lot. Claimant counts for the pound Wednesday morning. Again, sometimes it does, sometimes it doesn't. It needs quite a big deviation on that to actually make an impact. So we might find that the pound will just move on it because they're looking for any reason at the moment to dump that pound. US dollar PPI tomorrow afternoon. So that's the first main news event of the week. Producer price index. That leads into the CPI, which leads obviously into interest rates. So that's the biggest news we've got tomorrow afternoon before the market opens. We've got the New Zealand rates on Wednesday. So if you are holding any New Zealand, just bear in mind that every time we've had an interest rate change on the New Zealand dollar in recent times, it has gone nuts for no reason whatsoever. So every time we change interest rates on the New Zealand dollar, they move the market like a crazy thing. Yeah, it's not there. It's there. Yeah. So just be aware. Tomorrow we've got, Wednesday we've got that coming out. It's not forecast to change. There is no reason for the New Zealanders to put it up or put it down. Inflation is still sticky for New Zealand. We're at 5.5, obviously, 3.3 on inflation. It has come down very hard, but we haven't had a new figure to tell us whether or not that is going to continue. They think it's going to bounce, which is likely because that's what's happened in Australia. And if that happens, there is still a chance that they may well put one more on it, but it's very unlikely they'll increase it again. So just be aware of that. It doesn't matter whether that comes out as expected or not. What it does, it seems at the moment that every time they release an interest rate, the market seems to be offside on it and just goes completely the other way. So just be aware that that's coming out. If you've got any New Zealand exposure, it's either going to go your way or it's not, but expect a big volatile move on the New Zealand and the Aussie dollar on Wednesday morning. CPI for the pound, so that's an important one. We're expecting a bounce of 2.3. If we do not get that, we will see a big drop in the pound. Yeah. So potentially big moves down in the pound on Wednesday morning, pre-market. If we get the 2.3, we will probably get a slight bullish move on it, but the market is bearish. We're looking for reasons to drop that interest rate again. We've hit target. We only dropped it by 0.25%, and there's a good chance that we're going to need to drop it again. I'd love to see that come out at 2. Kiss that pound goodbye. Not that I've got any exposure on it at the moment because I'm flat, but So be aware of that one on Wednesday morning before I come on. We got CPI for the US dollar. Again, big news. So we're forecasting a 0.2. We're forecasting an ever such a slight bounce yearly to remain the same. Again, if that comes out lower than expected on any of those, kiss the US dollar goodbye. They are selling off the US dollar now because we've got interest rate drops coming. If that does anything lower than forecast, they will be looking to drop that faster and harder. At the moment, we've got a forecast of 1.25% for this year, which means we're going to have to do a 0.5 twice, and then probably a 0.25 and a pause. So if that drops dramatically, i.e. that 3 comes in at a 2.7 or something like that, there's a chance that we'll drop interest rates faster and harder. So that US dollar will come down hard. If we get forecast figures, difficult to tell what the market will do with it. But very big news there. So Tuesday afternoon, we've got the PPI. If that's lower than forecast, there's a good chance that will be lower than forecast. So all looks like it could potentially be bearish this week. Then on Thursday morning, we've got the unemployment rate for the Aussies, not forecast to change. Aussie unemployment rate is pretty stable. It's not good, but it's not massively bad. So if we get a big increase in the unemployment rate, that will push them to drop that interest rate faster, which will be bearish for the Aussie. So that's another big one coming up on Thursday morning. We've got then the GDP numbers for the pound. Again, that's forecast to drop. If it does come out as a 0.1, or even worse, if it goes into recession as a negative number, pound's going to drop dramatically. Euro is a bank holiday. And then we've got retail sales for the US in the afternoon. And then on to Bullock speaking, which isn't going to do a lot because we've heard everything last week when they did the interest rates, and retail sales for the pound on Friday. So busy week. The week is focused around Tuesday, Wednesday. So those are your big ones. It's the CPI and the PPI numbers for the US. And we've got a lot of news, obviously, on Thursday as well. So, and if you've got any New Zealand exposure, obviously, that Wednesday morning is going to be absolutely critical. So that is your upcoming news. Over the weekend, not a lot. Nothing much has happened over the weekend. Bank of Japan won't be able to hike their rates again this year. It doesn't really matter because the interest rates are so minimal and tiny. It doesn't make a lot of impact anyway. We're still in extreme fear. That's it. So there's nothing over the weekend exciting at the moment. Morning, everybody else. Mark, Patrick, CrowdStrike, Mike. Yeah, quite possibly. Morning, George. Danny. Morning from Sweden. Don't know any Swedish. Can't be clever there. So at the moment, I'm flat. Nothing, no exposure on at all. Basically because, as you can see, ADRs dead. Weekly ranges obviously are dead because nothing has moved this week yet. This time last week, AWRs were lit up like a Christmas tree, if you remember. Last Monday was absolute carnage. There's no RSI extensions either. The 4-hour and the 1-hour RSIs are totally dead. There's just no movement in the market. So all the movement that we've had has all reset itself. So we're in pullback mode at the moment. Nothing is doing anything. So I'm going to go through all the pairs this morning, have a look and see if there's any good support resistance levels coming up that could potentially take trades at in line with what we're expecting the trend to be. Yeah, and just have a look through everything. But there's no RSI extensions at all. So the EA is not taking any new positions. There's no ADR extensions at the moment to take new positions off. ADRs are increasing quite nicely based on what happened last week. Obviously, all this movement that we had last week, you know, the crazy Monday that we got. So big, you know, sort of movements happening now on ADR, which is good. But we are in August and we're approaching the middle of August now, or will be by the end of the week, which means markets tend to go a little bit quiet. So it does tend to calm down quite a bit over the summer period, summer trading. So the main extensions we've got are on these yen pairs still. So All the yen ADRs are much, much bigger than they have been because obviously of the big profit take move that we've seen with the yen after the intervention. So yen is the liveliest thing we've got out there, but it's very, very difficult to know how to trade this, what it's going to be doing moving forward. So morning XR update news. My RSI dashboard is set to medium price 21.14, but it's all lit up telling me the wrong thing. You've got a problem. No, there's no there's a problem. I don't know what it is. If it's all lit up, I would say you've probably got, that's not it, RSI. If it's all lit up, I don't know. You've got a problem with your RSIs. Go to daily charts and make sure you got 10 days worth of data in there. You probably haven't got any data, so it's probably showing you the wrong readings, isn't it? Don't know. Also, make sure you're monitoring the right instruments. You're not monitoring some other instruments, or I don't know. I don't know. That's a new one on me, Danny. No one's ever said that before, so I don't really have a solution for that one. Right, so we're going to go through all the pairs this morning. So let's have a quick look at what's going on in the open. So no trades on the DAX this morning. Pre-market range was too small. Opening range, again, too small. Very small range on the DAX this morning. Oh, that's the open. What am I doing? I'm measuring the wrong candle. Yeah, really small ranges on the DAX this morning. So looks like a failed breakout on the DAX. That thing could go anywhere today. FTSE is a long break. So FTSE, obviously if we get weakness in the pound today, we should expect a little bit of a rally on the FTSE. So we seem to be opening fairly weak on the pound. We did on the pound CAD anyway. Yeah, we are. Look, glad I got out of that. It's a very big sell-off, that. Yeah, 3-bar reversal going in on pound Swiss at last week's high. So they're selling last week's high, basically. Friday's high at the moment. So we should see, hopefully, a little bit of a rally in the FTSE today. So target is up in that propulsion gap. We've got a resistance to the upside here as well. That's a really badly drawn line. So from there, above that propulsion gap, and this low here. Yeah, so that area there is an area of interest, and so it's just above there. So hopefully, I'm just going to move my TP1 down. Just moving TP1 down slightly, just below that area, because we may well find they'll sell that off. So we'll see where that goes today. Right. So FX pairs. So I'm going to whiz through everything today because obviously there's nothing else to look at. I've got no exposure on, so I'm looking to get into something at the minute. RSIs are really flat. Everything is sitting around the 40-50 mark. So we are really, I mean, this chart tells this story, doesn't it? I mean, we are completely sideways at the moment, not going anywhere. So we'll start off with the yens. So I'm not actually trading any yen pairs at the moment. Still, I really do not know what to do with this yen at the minute. Obviously, the massive volatility expansion that we've had off the back of the intervention means the market obviously is no longer using the US dollar carry trade. What they will decide to do with it now is very, very difficult to call. So the interventions obviously worked this time round after the failed one last time. So we are either going to pull back and make a new down leg, or we're just going to go into a similar sort of price action contraction sort of thing down here. Very, very hard to call it. There isn't really any new intervention going to happen because there's no reason to, because obviously the US dollar yen is now where the well, not where the Japanese want it, but below 150, which is where they wanted it. Yeah, so that was the previous intervention level from a few years ago, which we tested. Then we broke through. We're back down below that 150 level. So if we get back to 150, that's an area I'll probably be interested in shorting. So looking for somewhere in the region of a 38 retracement on the leg, which, as you can see, ties in almost perfectly with the 150 level. So somewhere around there, I'd be interested in selling it. But from where we are here, could go either way. It could just flag and drop. So all the yen pairs at the moment, the bias is obviously going to be short. But for how long? No idea. So I wouldn't really want to be buying this at the moment. But I equally have no reason to sell it as yet. So very, very difficult. So watch previous levels for any kind of price action. Obviously, last week's high turned into a double top. So if we do hit last week's high again, potentially that might be a good spot to get in. But I'd much rather see it come up and test that 150 level, because I think now we've broken below 150. That's where the market will want to probably watch and be selling from. So all the yen pairs, they're all in the same boat. Only trade one yen pair if you're trading the yen. Pick one, doesn't really matter which. The pound is probably going to be one of the most bearish because of interest rate drops, and obviously US dollar, because we're going to drop the interest rate on the US dollar as well. And as they pull out of the US dollar, they want to put their money somewhere. Yen is obviously a good place to put it if you want it fairly safe. So that would make sense for that to come down strong as well. But all of the yen pairs, as you can see, all doing very similar things at the moment. But it is literally a coin flip. So looking at the ADRs, obviously the ADRs are big at the moment because of the intervention move. That is normal price action. Yeah. So we're even expanded volatility above normal price action. But if it does return to those sorts of levels, you know, getting up to this sort of area here is the sort of thing that will take 2, 3, 4 days normally. So just be prepared for the price contraction to start. But any ADR hits to the upside, we're looking for shorts. Any RSI extensions to the upside on any time frame, really looking for shorts. So that's all the yens. The Swiss francs, again, same thing. Just trade one. They're all doing very much the same thing at the moment. We're in extreme fear mode at the moment. So extreme fear basically means anybody sneezes anywhere, they put their money in the yen and the Swiss franc. Yeah, so we are not interested in investing in the stock market. We're interested in putting our money in safe places at the moment. Swiss and yen tend to be the places we tend to go to. So the Swiss franc, as you can see, has strengthened dramatically in the same way as the yen has. Probably going to continue, especially if anything kicks off in the Middle East, which tensions are very, very, very high out there at the moment. So we're in a really good spot. Lovely double top rejection on the Aussie Swiss there. Look, last week's high. Yeah, limit orders triggered. So good looking short opportunity on Aussie Swiss there. We've just had a reversal on 5 minute. So yeah, looks good for shorts. So Swiss franc, although the interest rates are coming down incredibly quick on the Swiss franc, their inflation figure is way below target and not moving. So I think there's a good chance that they won't drop their interest rate again. They'll want to wait for the rest of the world possibly to catch up. And it doesn't really matter if that ticks up ever so slightly. GDP is absolutely fine and rising. Nobody's unemployed. That's not changing. Nothing's changing in the Swiss, which is why it's a safe haven. It's super safe. Everybody's got a job. Everybody's got loads of money. The Swiss make tons of cash. There's low inflation. You can afford a house. Everything's brilliant. Yeah. So if you want to put your money somewhere safe, you're not going to earn a lot on it, but you're not going to lose on it. That's where it goes, the Swiss. So that's where we tend to pile into during times of crisis. And at the moment, everybody else is dropping their interest rates and at unexpected levels as well. So I would suspect we will continue that downward spiral with all the Swiss franc pairs. But as you can see, they're all very, very much the same. Trade one Swiss, you're trading the same thing. Doesn't matter which one you pick. If you pick two Swiss pairs to trade, you're just double exposing yourself on the Swiss, because the Swiss is the thing that's going to move whichever pair you're trading. So they are all looking good for shorts. It's just trying to find a reason to get into one. That's the same as the yen at the moment. Don't really know. The other downside to the Swiss, as I've spoken about before, is nice rejection there as well. Jordan has come out openly now and said that they will intervene as and when required to either power up or depower the Swiss. So at any point, Jordan could basically sell a ton of Swiss franc and this thing will pop for no reason whatsoever. But Jordan wants to do it. So you've got to be very careful with both of these Swiss franc and yen pairs at the moment. I think they're very good stop loss opportunities. Beautiful 3-bar reversal going in there on the US dollar Swiss. Look. Push, pause, pull. Market really selling off or buying into Swiss. Worried about what's going on in the Middle East, I think, potentially, after what's happened at the weekend. We've got lots of talks going on, which can fail, obviously. So we'll see what happens. But so those are your Swiss and those are your yens. Again, I'm just not getting involved in them at the moment. EA's not on them. Don't know what to do with them, so steering clear. So looking at the Aussie, Aussie at the moment, basically interest rates are still fairly high and holding. Inflation hasn't come down. Unemployment is starting to go up. So there is a possibility of them putting another small increase on that and taking it up by another 0.25%. We don't know when. And we don't know if. So it is kind of, with the Swiss at the moment, it's sort of neutral to bullish. Canadians are dropping interest rates, so it's more bullish than bearish. So as you can see, after the big drop that we had last week, it's completely recovered that, and it looks like it wants to go long. So at the moment, though, you can kind of trade it in either direction, just waiting for some kind of signal somewhere. So we are flat on the RSIs at the moment, as you can see. But I'd be more interested in longs than shorts on this one. Bear in mind, you've got the New Zealand rate coming out on Wednesday morning. That will affect the Australian dollar as well. So because it's a bank holiday in Japan today, and we've also got no news, I suspect today we're just going to see a rotation day into tomorrow, and then things will start to pick up tomorrow. Aussie New Zealand, totally sideways. So again, this one, you know, huge moves at the moment on this thing. Any news basically for either of these just sends it flying. So it's very, very volatile at the moment, the Aussie New Zealand, and it can go absolutely any way. So when you've got pairs like this, there's an argument for spacing your trades further apart, because those moves off the news are really big, easy 280 yards, aren't they, at the moment? So Wednesday for this one. So Wednesday morning, New Zealand dollar cash rate. So we'll see what happens with that. At the moment, there's absolutely no reason to get into it. Just sitting and waiting, basically. Propulsion gaps are working well. And obviously, we've got a very large propulsion gap there. So there's a much bigger argument for going long and then dropping. But that will all be determined by the news. So we have to wait and see what happens with that one. Aussie US also very extended on that big drop that we had, and then we had the massive crazy Monday, which completely undid itself. So at the moment we're nowhere, but bias is definitely long on this one. So the Aussie potentially may increase by one more interest rate. Unlikely, but there is a possibility. The US have now come out and said, actually, we are not going to do it in 2025 now with the interest rate drop. We're going to go 1.25% probably this year. We might even do it this week. There was talk about them doing an emergency interest rate drop this week. It's gone quiet since then, but US dollar should be going into a bearish cycle now. So shouldn't be going anywhere but up. So you've just had a reversal alert short there and a retest. Not gone anywhere yet, but that's the one I'd be more interested in. So market structure, pull back into there. So if you drop down by 3/4 of an ADR today into that propulsion gap, good area to start buying it. But at the moment, it's sideways, not doing anything. Canadian dollar, we've covered CAD Swiss. All those will. Canadian's obviously weak, but we'll cover the euros next. So again, everything's a little bit screwed after this move from last Monday. Market just slipped hugely for no reason and obviously came back. So we're reset now back to where we were the week before. And this is bearish. So Euro is dropping interest rates. Australian at the moment isn't. So we should be seeing bear moves started to come into this Euro and continuing. So looking for short opportunities on this one. So looking for RSI extensions to the upside, ADR hits to the upside, any reason to get in short. If we come up and fill in all the propulsion gaps, shorts, last week's highs, yeah, so usual stuff, looking for some kind of movement that we can get into on pullbacks. Euro CAD, same thing. So any kind of pushes up into ADRs, RSIs, look at fibs if you want to as well. I mean, basically at the moment it's summer trading, look for any opportunity just to press a button because it's usually very, very dead in August. So yeah, we've had a lovely little run on this Euro, which is a pullback. Not on the Euro CAD, it's not actually, because the Canadian's been weak with the US. But most of the Euro pairs, we've had this little run, they've been pullbacks on downward movement. So yeah, just looking for some kind of downward movement. So any kind of push up into propulsion, look for shorts. Unlikely we'll get up there, 300 ADR. But, you know, there is a possibility the Fed could come out and say, you know what, we're not going to drop interest rates. And all of a sudden, it goes the other way. So you just don't know. Or rather, that would go down, wouldn't it? But so EuroCAD, just flat, nothing to look at really on that one at the moment. Euro pound, this move, obviously, this is what I'm talking about with pullbacks. We are bearish on the euro pound. This is a bear against a bear. The euro interest rates have come down. The pound interest rates have come down. They're both forecast to continue to drop. So, yeah, looking for short opportunities. I got out of this last week. So, oops. So I took this off last week. So that was the entry there and exited on that move last week. So that was the RSI extension to the upside. I think there's a lot more drop on this, potentially. But this move really screwed everything last week. So I'm in a little bit in cautious mode. All indicators are off the charts, aren't they, at the moment? No moving average, no RSI, no any indicator that you use is going to be completely screwed by that 2-hour move that we had at 300 ADR across the market last week. So I got out basically last week, but I'd be more than happy to jump in short on this again because I think it's going to continue to the downside. This move here is completely unwarranted. There is absolutely no reason for that euro strength. So it's with these two, it's a case of who's going to weaken first, and that's going to be done by CPI and interest rates. So as you get the euro CPI figure come out negative, the euro will drop. Then you'll get the pound CPI come out negative. The pound will drop, causing euro pound to go up. Then euro will drop their interest rates, causing that to come down. Pound will drop their interest rates, causing that to go up. Yeah, that's what market structure is. Basically just news driving the market up and down. So they're both bearish. Yeah, the pound is usually the stronger of the two, which makes this more interesting for short opportunities. Euro New Zealand, beautiful hit on the highs last week. We looked at this for shorts. Actually, it was the week before, wasn't it? I was on holiday. We looked at it last week as a false breakout, and it seems to have happened. So we've got basically a double bottom coming up here. That's a hell of a head and shoulders. If it manages to get back up to there, don't think it will. lovely for shorts. So if it manages to get up to here, i.e. the New Zealand dollar has weak news, that'd be a lovely spot to short it from. But obviously with the New Zealand dollar news coming out this week, those interest rates, it could go north, it could go south. New Zealand dollar at the moment, it doesn't matter. We've had the same interest rate for years, for months rather, on the New Zealand dollar. It's 5.5. They're not changing it. Every time they announce it's 5.5, it either gets massively bullish or massively bearish. There is absolutely no reason or rhyme for why it does it. It just does. So Wednesday, it's going to take off in one direction or the other. Right now, there's no signals anywhere. So I'd be much more interested in shorts, obviously. You've got a very, very well-defined range low. We've just taken out the high of last year, tested it, tried again, failed. Yeah, much more likely to do that. So I'll be looking for shorts on this one. So dropping down lower time frames, RSI extensions to the upside, ADR hits to the upside, any propulsion gap tests for shorts. But nothing really to do at the moment. Euro US, this is a tricky one. Euro's bearish, US is bearish. Obviously, when the US is on a bull or a bear run, it tends to take control over the entire market. So you would expect potentially bullish movement on the Euro US. However, I would be happy taking this in either direction. It's the most liquid instrument on the planet. It's the most traded currency pair we have. The liquidity is high. The ADR is very mediocre, and it doesn't really do much apart from move on news. So it will always be moving up and down. So you can trade this really in either direction at the moment. It's just bear in mind that this is what is going to be moving it most of the time. So when you get US dollar news, you're going to go off on a run for a few weeks, a few days, however long it is. And then it will obviously correct itself. So it doesn't matter which way you trade it, but at the moment, it's flat. Yeah. So ADR hits to the upside or the downside, would be happy in either direction on that one. Just nothing to do at the moment. So right now, you know, just flip a coin. Yeah. Reversal alerts, moving average crossovers, anything you trade, any system strategy is not working. Nothing will work in a market like this. Selling the highs, buying the lows will work until it decides it wants to break out. So, you know, just a case of waiting for something to happen. At the moment, it's flatlined, dead. Pound. So pound is bearish. We've got lovely rejection again at the highs from last year. So everything seemed to come up and test last year's high off this move last week and reject. Everything's rejected. So Australian dollar strong, pound weakening interest rates. So that's what I'll be looking for. Coming down to at least test the monthly lows down here. So double monthly low. So yeah, looks good for shorts. Just trying to find a way to get into it. The pound's selling off this morning. So I've got out of my pound CAD, as I said. Didn't go anywhere. Just didn't manage to get any movement on it. So pound odd, shorts, just looking for an opportunity to get in, really. So RSI extensions to the upside would be beneficial. I'd much rather be short than long on it. Hence me getting out the long position on the pound CAD. So look for a retest of last week's low. Sorry, previous week's low. And that propulsion gap, which is basically the same thing. So if we can get up to there today, there's a potential pullback. That high here, you can just get rid of that, discard it. Yeah, that is the high of last month. That is a nice propulsion gap, but that was caused by that reaction to that. Yeah, so I'll be much more interested in shorts on it. I don't think we'll get back up to there, and looking to come back down and retest this area down here. We are bouncing at the moment off this level. So if we break that, you can kiss everything goodbye down to there. So it's just a case of waiting to see what happens on Wednesday with the New Zealand dollar interest rate, because that's going to move the odd. So sitting sideways on everything. Pound CAD, as I say, got out of the long on that one. Don't like it. This price action today is very indicative of limit order sells. Yeah, so we pushed up. they sold that level. We tried again, they sold that level. We turned around, we pushed up. We tried again, they sold that level. We pushed sideways at the end of last week. This morning we've pushed up, we've hit that level, they've sold that level. Yeah, they do not want to go through that level. Yeah, there is an iceberg order with the banks here. They are selling it. So it's going to take a hell of a move to get through that. And if it does, it's going to be exhausted. So it'll probably be a false breakout. So I think this is a lovely sell opportunity. It's just not in the right level for me. So I'm not selling it just because it couldn't get through yesterday's high. If we get up into that double bottom at previous week's low, yeah, I'll sell that because there'll be limit orders up there. So if we get an ADR hit to the upside, we get an RSI extension to the upside, short. But don't really want to be long. Didn't want to be long when I took it, but I mean, that is a massive extension. 2 days solid down, double ADR day. Had to take it, and it couldn't get any further, but not quite sure how much movement up we're going to get on it. So pound Swiss and yen we've done. Pound New Zealand, again, we're waiting for Wednesday morning. I can see this just kind of flagging around, until Wednesday, and then Wednesday we'll get one of those. Yeah. Which way is impossible to tell with the New Zealand dollar. It just, there you go. Just makes absolutely no sense at the moment. So that was the last one, 10th of July. Yeah, July the 10th. Interest rate unchanged. So you see, previous, forecast, actual has not changed for the entire year. Yet every single time we get an interest rate change on the New Zealand dollar, it goes completely mad for weeks. There doesn't seem to be any reasoning for this. It's not as if the market has bought into the level. Yeah, we didn't move into the interest rate and get it wrong and go, oh crap, we've got to correct ourselves. We didn't do anything before the interest rate and it still went mental. So just be very careful if you've got any New Zealand dollar exposure on. If it goes your way, hold it. Yeah, if it doesn't, get out, because it's likely to just go parabolic. This is what it's doing, this New Zealand dollar. It's a very odd thing at the moment. Every time we get an interest rate change, it just goes crazy and it doesn't come back. Yeah, these propulsion gaps that it creates, they take ages. That's not an interest rate, that one, but they take ages. It's just moving very, very erratically on its interest rate for some reason, and I don't know why, but it is. So we don't need to know why. We just need to know what is happening, and that is what is happening. So that is what I would expect to see when I wake up Wednesday morning. Which way it will go, I don't know, but be very careful if you try and mean revert it, because the last few times you've tried to mean revert the interest rate changes, it hasn't worked. Pound US dollar sideways for the last week, not really gone anywhere. Again, same as the euro US dollar. There is a possibility, even though the pound and the euro are bearish, of this one to fly, because if the US dollar drops and drops hard, it won't stop. And the thing we've got to drive that this week is the PPI figures and the CPI figures. So the producer price index comes out tomorrow afternoon, and then on Wednesday we've got the consumer price index. If both of these are misses, you can kiss the US dollar goodbye, and probably for a while, because that is going to double confirm those interest rate drops, and the market is going to factor in more drops this year, which is going to drop the US dollar. So however, what will happen is that, and then they will correct part of that move, because this is weak. We'll have a CPI number, a GDP number, or something coming out on the pound, which will be negative, which will bring it back down again. So you can trade it in either direction. Just be aware that if the news comes out negative multiple times on the trot, you're going to get a multiple week run against you. But that's what position trading is all about. It's just scaling into the multiple week run and waiting for it to correct, which it does. So just trade as normal, but be, scaling gradually. This one you can trade in either direction. They're both going bear, so it's going to go up and down a lot. Again, second most liquid pair we've got in the market. New Zealand bullish. We'll wait and see. I mean, if they change that, there's no reason why they will, but there is a possibility. Yeah, if you look at the history of the New Zealand dollar interest rates, yeah, we've had 2. So this is where we started increasing interest rates from the COVID fallout. Actually, it was back in end of 21, wasn't it? But we had one unexpected result there, one unexpected result there. Other than that, the New Zealanders do what they say on the tin. Yeah, they give you what they say. Yeah, they're not the sort of bank like the Swiss, for example, that are going to say one thing and do another. They will say one thing and they will do that. So we won't expect them to change their interest rates on Wednesday, but which way it will go, we don't know either. So again, that's the last one that we had on the 10th of July. Yeah, didn't stop. We did get, at least we got a retracement into it. So just be careful. I've got my RSI set up on 80-20. I want big movement, big strong movement before I get interested in anything at the moment. So that would have been a lovely long. Yeah, I'm not getting in on 70-30s at the moment. I want to see the market really push to get somewhere. I want safer trades at the moment. So this is going to put a big move in on Wednesday, and obviously we'll get some kind of retracement off of it. Whether or not it does what it seems to be doing, there's one there, look, retraced into the propulsion gap and then continued. Retraced into the propulsion gap and continued. So if we get on Wednesday a big move like that, give it a couple of days and you should be back in that propulsion gap, but we'd be looking for continuation moves on it. So you can't really do anything with this at the moment. RSI is in the middle. There's no ADRs obviously today, and whatever trade you take today, it's going to sit around till Wednesday, and then Wednesday you're going to be right or you're going to be wrong. So we'll wait and see what happens. New Zealand dollar, US dollar, very much the same thing. Got a lot of potential to move up this, but you know, if that New Zealand dollar tanks on the news and then the US dollar weakens on its news, you're just going to find the thing doing what it's been doing most of the time. That. So you could really trade this one in either direction as well. However, if that New Zealand dollar goes massively bull on the news for some reason and retraces, you're retracing straight back into PPI and CPI for the US dollar. If that comes out negative, this thing won't stop for months. It'll just go. So just, you know, if you do get into a short trade on this, on positive New Zealand movement on the news, and then the US dollar gets a load of weak numbers, I'd just jump ship, because this thing could continue to go for a long period of time and not stop. Yeah, weeks and weeks and weeks. So just be careful with everything at the moment, especially New Zealand. It's very erratic. US dollar CAD. Again, this thing this whole period here, I made a lot of money out of the US dollar CAD. If I'd have just been trading the US dollar CAD with decent risk, you could live off of it. So we've had this big, strong move, which is obviously now done the 50% retracement. The US dollar and the CAD move together. They are both bear. So in theory, price action should be along those sorts of lines. However, what we'll probably see is that type of price action moving into more of a downward channel, because the US dollar is potentially geared up to get weaker than the CAD. They're both moving on oil price, obviously big oil exporters. So you should be able to trade this really in either direction over the coming months, especially towards the end of this year. And then we'll see what happens next year. But at the moment, just waiting for any kind of signal. Right now, everybody who trades fibs is buying the crap out of this. If they're not paying any attention to news, they're about to die, because we've got PPI and CPI coming out. They may not be dying, you know, they may make a lot of money, but either way, this thing's going to move on Tuesday, tomorrow, and Wednesday with the CPI and the PPI figures. So right now we're in a contraction. We're waiting for the news. So it could go either way. More likely, we're going to get some kind of bearish movement off of it. So any kind of movement to the upside, we're looking for shorts running into weekly highs and lows, that sort of thing. But right now, flat, dead. So that's everything. Not a lot really we can do today, because everything is dead. Everything's just flat. Flat as a pancake. market's dead. Stock market's dead today as well. So DAX, little move up, little move down, back up again. FTSE has retraced into the opening range. Not doing anything, is it? So nothing. It's a dead day. Japan's on holiday. Nobody's interested. Let me catch up on chat. Thanks, Steve, for the updates on the POS EA. Looking forward to the breakout settings. Yeah, I'm not sure I'm going to do that. There's no edge in it. I've got my new version that I've got version 1.6. So I've added this ATR breakout in there to test it, basically. I've been doing some testing on it, and I can't really find an edge that is any different to the mean reversion strategy. Yeah. So I'm in two minds as to what to do with it. One of the things that's making me cautious is MT5, because to get that new version has been a hell of a lot of coding work, and the thought of having to recode the whole thing for MT5 drives me nuts because it's awful. But all the ATR strategy or ADR strategy is a strong move, which we know Tim tends to revert. After that reversion, it does one of two things, doesn't it? Yeah. So whether you take it as a breakout, position trade into the breakout, or whether you take it as a mean reversion and position trade into the mean reversion, doesn't matter. Yeah. After an ADR hit, there's a 50-50 chance of it either continuing the breakout or the breakout failing. So adding the breakout into the EA adds another way to trade, but what I wanted to use it for was diversification for myself. This is obviously just from my perspective. Diversification, so that I've got a mean reversion and a breakout strategy running. Using the same move to create the long and the short is equivalent to just hedging. So you deal with one that works. So I'm undecided as to whether or not it's worth doing. But I need to do some more testing on it. So yeah, I've got it set up at the moment on ADR reversals. I have absolutely no idea. Hang on, sorry, one sec. Oh yeah, and that's the other thing with the ADR reversal, the ADR breakout strategy, right? So with the ADR breakout strategy that I've built into the EA, what it does is it waits until end of day to place the order. So I want the price to be gone above and closed above ADR to take the trade. What tends to happen the next day? It pulls back. So virtually every initial entry is wrong. Whereas with ADR reversals, most of the time the initial entry is right. Not necessarily to TP, but it's in the right direction. Virtually all the time with the ADR breakout strategy, it immediately goes into drawdown. So the clever person would go, we had an ADR yesterday, let's get in. But sometimes it doesn't do that either. There is never a right or wrong way of doing anything. You know, whichever way you want to trade, everybody can show you a better way to do it. Because there's always a better way to do it. Because sometimes there is a better way to do it. But there's also other times where it's not a better way to do it. There is no right or wrong in trading. It's completely discretionary. And it's completely random. So I'm trying to figure out a logic. The thing that also concerns me about this, if I release this as it is, somebody's going to say I want it to work a different way, which means I'm going to go down the same route as I did with the market reversal alert CA. It's going to have a billion settings and it's going to confuse the crap out of everybody. I just want to keep it really simple. That's the point of building it. So I couldn't really, let me just put that on H1. I couldn't really find an edge that is better or worse than the ADR reversal strategy. I've no idea what this is set up to do at all. Oh yeah, this is a risk reward version I was playing with. Using ADR reversals. So that would be a fundamental shift news event where the market just goes back the other way. But overall, profitable. Stagnation for a bit. But yeah, so that's the ADR reversal. If you switch it over to a breakout, that's probably not set up. See, this is the thing with breakouts, and this is kind of what I was saying. This is set up to automatically get out of positions after a certain move against. So this is kind of a hybrid, if you like, with the RSI2 strategy in that it closes the positions out. The problem with it is, obviously, when you get a breakout, most of the time you get a pullback. That pullback, obviously, if you do use a stop loss, in this case, 100% scale out, always results in a loss. You've got to turn these into a position trade. So this is the wrong setting to be testing with, really. But if I turn that to false and then turn that on to true, you'll find this will probably be much more profitable, as always, because it's a position trade strategy. Holy crap, look at that. Blew the account. No, that's not right. What's that doing? It's not using a multi-trade target, so it can't exit. Anyway, I'm just making tests up as I go along. Yeah, there's no way for it to exit because it didn't have an exit target. But anyway, yeah. So I'm undecided what I want to do with it at the moment. I need to do some more testing because there's no point in putting it out there if there isn't a long-term edge in it. Basically. Afternoon, Pot DJ, Vitali. Looks like the odd is trying to go up. Oops. Yep. It is this morning. Or is this the New Zealand dollar trying to go up? This is the New Zealand dollar. New Zealand dollar dragging the Australian dollar with it. So movement on the New Zealand dollar. So they'll be scaling in to a long position ahead of that. But that doesn't mean it's going to go that way. That means that they are moving ahead of the news. So this move up, is it exiting their short positions before the news, ready to get in short again? Or are they anticipating a long move off the back of the news? Everything, it doesn't matter what you follow, whether you do use a strategy, whether you're looking at fundamentals, there is always it's going to do that or that. So the move that you're seeing is basically them either exiting their shorts or entering longs. Either way, it's the same thing, isn't it? They're pressing the buy button. Who knows? How's RSI been doing? Yeah, really good. Really good. 20% this month. Well, depends on what risk you're using, but very well. Regardless, whatever risk you're using is doing very well. Terminal's not opening. There we go. So yeah, up 10k this month. This is based on $1,000 risk. I got $6,000 to draw down. Pound CAD is $5,000 of that. So pound CAD is the only one here. which isn't working at the moment. But again, this is partly to do with the way that the position trader EA does this. That entry there, say shouldn't be taken, wouldn't have been taken with my friend's RSI2 strategy because he uses daily charts. This is using 4-hour entries. And basically, because RSI2 from yesterday was still extended when it exited its long trade in profit, it decided to get in again. So, and again, I can't really keep manipulating the position trader EA to do things in specific ways. But now that you mentioned hedging, kindly briefly explain how we'd use the position EA to hedge. Funnily enough, I was doing some testing on that. So with the position trader EA, I'll use 1.5 because that's current version. All you would do, so let's say we go with RSI, risk, scaling, ADR, so what you would need to do, make sure you have a multi-trade target set up, which is basically long and short accumulated profit. I would normally set that fairly low because if you hedged, you want to be out because you're wrong. Drawdown control, just leave it at 6. We'd need a fairly small RSI. So let's use something like the RSI2 strategy on the daily. Actually, let's use RSI 5. Which is basically 5 days worth of relative strength. We can run it on the 4-hour then. So all we've got to do basically is allow multi-direction trading, hedging to true. And basically what it will do is it will, when RSI is extended to the upside, it will short it. When RSI is extended to the downside, regardless of whether there's a short on, it will long it. Yeah. Let's run it on the hourly. So there we go. We're taking a short there. Out. Another short. Out. Long. Long again. Long again. Long again. Long, 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 long. What's drawdown control set to? I don't know. It's not doing any. Maybe I didn't say. Oh, yeah. So it's doing drawdown control. Just exited. Another trade. I think the targets are set too tight. It's not going to hedge, is it? No. I don't know what's the best settings to use. Need bigger targets, don't we? Let's set the target to, that's 2R. Let's go 4R. I'll go, sorry, 1,000. That'd be, wouldn't it? Set the targets bigger so it can hedge. So that's all you've got to do basically is just set multi-direction trading hedging to true, and it will trade any direction. Scale out so we can see the trade. So there's a short, another short. Didn't quite hedge there. It got out the shorts before it entered long, but it entered long the day after. Just going to take a hit here because obviously there's a big parabolic move, but it got out of that. There's your buys, exit. There's your short, exit, short, long. I can't get it to hedge. Need even bigger targets, don't you? So, yeah, you just need bigger targets. But that's how you do it. Let's go 2,000. That will definitely hedge then. Maybe I set the let's use RSI2. That RSI2 would definitely hedge. There we go. So short, long. There you go. So RSI triggered short. We pushed down, didn't take it off. It pushed up again, didn't quite go far enough to get into a second position, which is there. And then it pushed down. RSI2 got extended to the downside, so it took a long. So you're now hedged. You've got more downside than you have upside. Got 33 short and 26 long. So there we go. At that point there, it closed the long position out, scaled into the short and closed the short position out. Now we've gone long again. Nothing's going to survive a parabolic run like that, obviously. So there we go. So there's a good example. So we had a long and a long and a long. So we had 3 longs entered there. It pushed up, didn't hit our target. We got an RSI entry short, an additional short. Price pushed down. We took an additional long there. And then we closed the entire position out there, all long and all short positions at the same time with the profit target. So it basically, at that point, the difference between your hedge long and your hedge short lot size was more longs than shorts. And on that push up, it managed to get us $500 in profit. Now we've got a hedge on long and short. There we go. Exited the shorts because the short side hit its target. Longs are still on. Exited a short again with a long still on. Longs out. Now we're short and long. So now we're hedged. Need one more. There we go. There's a hedge exit on all of the positions. So you had a long there, short there, additional short there, additional long there, additional short there. So basically with hedging, what you're looking to do is obviously as you're going long and short, you're locking in the hedge. So your drawdown is a lot lower. And all you're looking to do is get one side stronger than the other and then have a move in direction of that side. So we had a short, sorry, I had a short, so 2 shorts. We had a long, so 2 longs. So it's hedged, got roughly the same lot size on. Then we had an extra short on, so now we're short bias. So we've got 3 shorts and 2 longs. So if the market moves down, we're going to make money. If the market moves up, we'll scale into our shorts, but the long side will take profit, and then we'll wait for the short side to come back down. Yeah. So standard hedging, basically. Just using drawdown control, obviously, is what you're going to need to do. So when if you get any parabolic moves, whichever side you've got on is going to make money, but the side that doesn't, you're going to have to scale out. But the side that's making you money pays for the drawdown control, a percentage of it anyway. So you're not going to make as much money most of the time with this way of trading, and it can get a lot riskier. But the profit curve is a lot smoother. And the trouble with hedging is, and this is why I personally don't like it, you get stuck in hedges for a long time. Look how long that hedge was. So the first entry on that hedge was here. So the 8th of September. You got out on the 4th of January. September, October, November, December. This is why I don't like it. Someone's been contacting me with a strategy to do with hedging. You also can't hedge in the US, obviously, as someone's just pointed out, Vitaly. But the problem with hedging, and you know, someone's been contacting me with a strategy for hedging, which they've been trading very, very well most of the time. But the problem is some hedges you will get into and you won't get out of them for an absolute age. If you get into a hedge and the market decides to do this, you won't get out. You need an extreme, because all hedging is mean reversion followed by mean reversion followed by mean reversion followed by mean reversion followed by mean reversion, which is great. It will continue to build the hedge for you as long as the market does this, but it won't get you out. You've got to have an edge direction in your hedge, and if it does that, it won't get you out. It has to have a move which goes parabolic against your hedge for you to actually get an edge in the market to exit. This is why I don't like it. Everyone loves it because it locks in drawdown and it means you don't go into big drawdown, but it also means you make a very small amount of money every time you get out, and you can be in it forever. There's all sorts of things you can do, like working hedges from the inside and all sorts of other technical complex stuff, but it makes your life as a trader infinitely more complicated. You will be looking at these charts constantly trying to figure out a way to exit. It's a pain in the ass. Take the loss. If something goes against you hard, do drawdown control. Close some of it. It just doesn't, for me anyway, it just doesn't appeal. Lovely exit. See, some of them work really, really quick. Bear in mind, I'm making this up as I go along. I haven't optimized this. I haven't looked at best time frame, best RSI settings. I haven't looked at anything. I've just made this up on the fly. Yeah. And it's, you know, it hasn't lost any money. Hasn't made much. But then that's probably because the drawdown control settings are incorrect. The targeting's incorrect. Don't forget, I'm trying to set this up so that I could take trades. So I've set the target. It's way bigger than you would normally do on a mean reversion strategy. There's no way you're going for a 4-hour return on a mean reversion. Way too much. You're better off just using normal market structure mean reversion, I think, and getting out quicker as well. No, you know, taking a 4-hour target is just, it's not even a 4-hour target, it's a 10-hour target. It's way too big. Way too big. You're going to have a much better result doing that. Much quicker to get out most of the time. Not a lot you can do with that one, is there? But yeah, it's made way more money, look, not hedging. It is still hedging, but it's made way more money actually taking money. You know, this is what I keep saying. If the market moves in your direction and you've got a positive P&L, take the money. Yes, it would be lovely if it moved that far. But what if it does that? That pays your mortgage. That gives you glory. That causes pain. Pay the mortgage. Take the profit. Don't get greedy. Yeah, this market has absolutely no idea you exist, and the directional bias is random most of the time, caused by market participants. A lot of the time at the moment against fundamentals. So if you've got money on the table, take the money. Yeah, you're going to do drawdown control to protect your capital. Wait for the market to give you the edge, give you the exit. Much better way to do it. Very complex, yeah. Most people give up with hedging. Most people try hedging. I tried hedging. And there's a bit of a fad going on. Which is why I think people are contacting me at the moment with hedging strategies. There's a bit of a fad going on. There's a YouTube channel, I think, that's got a bit of traction, who explains the theory of hedging quite well and explains how to get out of the problems with hedging quite well, if you can. But if you haven't got the psychology for it, it's quite a difficult thing to do. And people haven't. This is the whole problem with trading. You can't change your psychology. You can try and retrain yourself as much as you like. But, you know, there, a good example. That exit there. Yeah. That's a 38 retracement down leg. Yeah. I would have got out of my longs there in anticipation of doing that. But very few people would have held it up to that, would they? Yeah, because the money there is available to me. Get out, take it. I hate it when this doesn't update the chart. Yeah, drawdown control. You've got to do the drawdown control when something is parabolic. It's parabolic. There's nothing you can do about it. You're going to take a loss. There is no strategy that doesn't take a loss. All strategies have got to take a loss. It will get the loss back. Yeah, but you've got to take it. Nice return there, look. Normal position trading versus hedging. Hedging came out as a break even and has got stuck in a trade for 4 months. Position trading just made money. Yes, it took drawdown, but that's what your account is there to be drawn down into. That's the whole purpose of your account. Everybody calls it their account balance. Traders call that risk. Yeah, you use this, whatever your balance is, whatever your risk is, to place into the market. You're going to draw down into your risk because you're not going to be able to get the direction right, because unless you've got a crystal ball and can see into the future, you've no idea which way the price is going. Neither does the bank. The banks will place the orders. If there's more of them, it will go up today. If there's less of them, it'll go down today. When they place the orders, they don't know if there's more of them or less of them. So if they don't know, how the hell could you know? You put risk on and you manage risk. That's it. That's the only thing you have available to you as a trader is risk. Everything else is random. So all you need to do is find ways to extract money out of the market, which is called an edge. Whether you do it using both directions. There's a really good strategy at the moment, which is why I've got this chart open. Somebody asked me about this on Friday. I accidentally flicked over to this on Friday, and someone said, why have you got another chart open over there? And there's a good reason for it, because there is a hedging strategy, a multi-currency hedging strategy that I've been looking into. And unfortunately, it's really hard to backtest. But it's to do with news trading. So, you know, we obviously have big volatile movement on news. So there's a strategy which somebody sent me a while ago, which I've just got round to. I've got DMs open that I keep opening Telegram of stuff that I've got to get round to it. And one of them is this multi-currency hedging strategy. And basically what it is on the day of news. So all you do is very, 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 very simple. All you do is you look at what news is coming up today. So let's say it's tomorrow morning and we go, okay, so today we have the pound claimant count. Probably not going to do a lot. Most of the time it doesn't. Sometimes it does a little bit, but we've got PPI coming up, big one. So we're expecting some kind of decent movement off of the US dollar tomorrow. So we open up the US dollar on two different pairs, yeah, that are usually fairly correlated as much as possible. And basically we go, right, we've got news coming up. So 8 o'clock this morning or 10 o'clock or 12 o'clock or whatever time I deem fit, I'm going to go long there and I'm going to go short there. Yeah. The idea being is the US dollar is going to do the same thing on both. So if we have big US dollar downward movement, both of these are going to pop. Yeah. So they should both go into drawdown, or one of them will go into drawdown, one of them will go into profit, basically by a roughly similar amount. What you then wait for is the other currency, the cross with the news currency, to basically start its retracement. And one of them will retrace faster than the other because one of them will be either more bullish or more bearish based on order volume on that day. That will usually create a hedge profit. Now, if it doesn't, what you can do is close out the one in profit at the end of the day and close out a percentage of the other one and then rinse and repeat the process the next day. So you will have a slight drawdown started on one of the currencies and the other currency will have just banked 100% of the move. Next day we do the same thing, and it doesn't matter which way you press the button. You just got to press the opposite button on the other pair. Wait for the news event to start. Yeah. If it's a euro news event, it will move it dramatically and it will also move the pound. So it's another strategy that I've been looking into to do with hedging, but using multi-currency hedging rather than using single currency hedging. But it needs to be preempting a volatility event, a news event. So you kind of have to pick days where you're expecting high volatility. And if that hedge, so let's say, for example, we did this pound US dollar and euro US dollar, and I went long there and short there. When the news event comes out, you watch your P&L. If your P&L suddenly makes $250 profit or whatever, shut the lot. So you're basically trading the news, hedging the news, and if the news event moves this one up loads and moves this one down, but nowhere near as much as that one's moved up, you've got a profit. The other thing you've got to be careful with this as well, you've got to pick the right lot size for each of them. So the risk over an ADR on each of them has to be the same. So the easiest way to do this is with, and this is why I've got these open with the position trader EA. The easiest way to do it is set the position trader EA up to be a $1,000 risk over one ADR, or $100 or $10 risk over one ADR, whatever it may be. Yeah. And then literally just hit the buy at market, sell at market. Lot size and risk will be calculated over ADR exactly the same on both instruments. So you don't have to worry about lot size calculation. So could use the ORB to do that. Yeah, but the ORB places pending orders. You're going to get slipped at the news. So that the idea is here, we don't want to get slipped. We want to get in on at a decent price. If you use the ORB and it put a pending order on both of these, yeah, what happens when you get whipsawed at the news? You're long and short on both. And you're also going to get slipped. Spread is going to go 3 times, 5 times, 10 times larger. So that's not the strategy. The strategy is preempting volatility. We're getting into two instruments in opposite directions on a currency we know is going to move today. We don't care about the direction. Doesn't matter what direction it goes. What matters is we have one trade that is going to work and one trade that is not going to work. So we do not want to be multi-direction on both of these. We want one way and one the other. And this is why I've left this chart open to remind me. I haven't had an opportunity, and again, today is not going to work, to try this on, because what I want to do is I want to do this on a demo and just see what happens, basically. I could build an EA for MT5 to do this, because MT5 you can place trades in both directions. You can do it on MT4 as well, but backtesting doesn't do it, and it just doesn't work properly in MT4. So I just thought it'd be the easiest thing to do is to live test it. And then, you know, you've got multiple options, haven't you? So one of these trades, you know, is going to bank you some money. Ideally, both of them combined will bank you a hedge profit, or an arbitrage profit, if you like. But you've then got options. So if this pumps and that pumps, yeah, you take that long off, bank that money. This one, you've got two options. You can either do drawdown control using that profit, or you can leave this trade on and just turn it into a position trade. So the problem with it is there's no RSI extensions. There's no movement that's extreme elastic band theory. There's no stretch apart from the news event. Now, if that news event is a fundamental shift, this thing could go parabolic. So it's probably better not to turn it into a position trade. It's probably better, if you got it wrong on that one, to take a trade in the right direction the next day and then take the other one the opposite direction. But, you know, and you just keep working it until you're out of it completely, and then you rinse and repeat. So, for example, on Wednesday, you can use the New Zealand dollar. So you would use pound New Zealand and euro New Zealand. Yeah. So you're crossing the euro and the pound, which will tend to move very much in the same direction with the New Zealand dollar. So if the New Zealand dollar pops, or drops in this case, so that the pound New Zealand, the euro New Zealand pop, you would go long on one and short on the other. This one would go into drawdown. This one, you take the money, and then up to you. What you do, you can do 70% drawdown control, and then hold 30%. And it depends what the profit is, isn't it? You could also, after the news spike, wait 2 hours, close this, and hope that the news spike retraces, and then take the profit off that one as well. That could be a way to create an edge. There's 1,000 ways to do it. But at the end of the day, it's just multi-currency hedging rather than single currency hedging. And the thing that appeals to me about this approach is I don't think you could, you're not going to get into a situation where you're going to get stuck in something forever, which is the downside, isn't it, of hedging. So, but what I might do, and I might run it in here as an example, is just to set up a demo account and just trade it. There's nothing better than live trading something because it allows you to identify the pitfalls in it. The problem with a strategy tester is it moves very, very fast. And it's also very difficult to do multi-currency trading with a single EA in the back tester. It's just the way the engine works. It's not particularly great. And you just kind of want to see things playing out. We know with news, yeah, look at last Monday as a prime example. Yeah, this wasn't even a news event. But that movement, yeah, we know after news events, they will often retrace 50% more or potentially 100% of that news event within 24 hours. Yeah. So the argument for, okay, we've taken the news trade on both. We've got to the end of the day. I'm going to close one out. Chances are the next day when you wake up, the other one will be in profit, especially if you're trading cross currency like pound New Zealand and euro New Zealand, because you've got the New Zealand dollar moving during the Asian session and London and New York, and you've got these guys not moving during the Asian session. So it could push and it could push, and then during New Zealand you're going to wake up and the other one's going to be in profit you didn't take. Also, you can do this in the US. So yeah, it's something I'm looking into. You don't need anything special either. The position trade EA is all you really need to do this. Well, you don't even need that. You just need to press buttons. It's just that this does all the lot calculation for you, and I don't want to get the lot size wrong, because that's going to be quite important. Oh, yeah, and as Harold has just said, it allows the US to do that even though it's hedging. Yeah. But yeah, it's not news trading as in ORB. So, you know, the problem with the ORB is on news, that, isn't it? Whipsaw and spread. FTSE is back into profit. I'm going to close it today. So just taking a break even on it. It's not going anywhere. And it's creating, at the moment, a bullish wedge potentially on the DAX. So it's not going anywhere, is it? There is no breakout today. So I'm just closing that out. If it pops, it pops. But I don't really want to get hedged on it. I'm waiting for the New York session. And we'll trade New York. Well, I'll trade New York this afternoon. So nothing exciting happening today on the indices. But yeah, maybe I'll try that tomorrow. I'll get another account set up. I'll get one of my, I think I've got a demo account actually, which has got some money in. Yeah, I have got one set up still. So I'll use a demo and I'll try this out and play with it. But it's going to be a case of just watching the P&L, really. That's the important part, is watching that P&L and speed of execution. So when the news event's going on, if you suddenly see your P&L in profit, you want to close, you want to hit the button on those fast, close everything out, and just take the money. But obviously, one of them is always going to go wrong, isn't it? I don't know. We'll see. It's an interesting strategy. It's certainly more interesting than normal hedging on a single currency, anyway. For me, anyway. So, morning champagne. Didn't see you creep in, Isbeth. Right. That's all I've got for you today. So, dead day from a news perspective. markets not really moving. There's no ADR hits today. Nothing really looks like it's getting anywhere near ADR either at the moment. We've got a little bit of movement on the Australian dollar and New Zealand dollar. As you can see, Aussie New Zealand is like that, which means that this is New Zealand dollar strength, really. So there's not really a lot happening anywhere at the moment. And as I say, because we've got no scheduled news events, it's kind of sitting around waiting for something to happen. Little bit of strength in the US dollar and the Canadian as well. A little bit of weakness in the Swiss franc this morning, but nothing dramatic. So sitting around day to day. So I'll be back tomorrow afternoon at 2:15, and we will trade the New York Open. We'll have a look at what's happened with the PPI figures tomorrow afternoon. So PPI comes out at 1:30 tomorrow afternoon. You've also got the claimant counts tomorrow morning to worry about. But beyond at 2:15 this afternoon, we'll trade the New York Open and see what has happened with FX. But tomorrow is a really good day to do, if you wanted to try it yourself, to do that little strategy. So because it's a US news event, pound and euro US are logical choices. You don't have to choose those, but basically you want the US obviously in it because that's what's going to move, and then other things. So probably a good idea, actually, thinking about it, just adding another tangent or another variable, is having a look at the currency strength chart and seeing what is really weak at the moment, and whichever one is the weakest, short that one against the US. Mind you, that would only work if the US popped, because otherwise you're taking short against a short, aren't you? So yeah, I don't think that would actually help, would it? No, probably wouldn't help, actually. I'm overcomplicating something very simple. Press one button, press the other one. Right, I'll leave it there. Anything else you need, let me know. I'll be in Telegram or Discord. I will see if I can figure out the mic. I'll watch back the replay from today and see what the mic looks like. But yeah, I need to figure out what the hell's going on with this software. It doesn't seem to be fixing itself. So I really don't know what to do. I've updated the firmware, I've updated the software, I've updated everything. It's just not working. So I wonder if there's a repository of previous versions I could find to download the old version and then turn auto updates off. Yes, that might be an option. I'll look at that today. So yeah, anyway, I will leave that there. Anything else you need, let me know. Otherwise, I will see you in the next session. Have a good day.